What are the advantages of buying in your own name or as a limited company when it comes to your first buy to let? Now, this is based on someone owning their residential. Now, what I mean by that is they own their own home. So, firstly, if you do it in your own name, one, when you're going to apply for a mortgage, there are a lot more mortgage options. Secondly, the interest rate that they charge on mortgages in your own name is slightly lower than those that get charged when it's as a limited company. So that's the next thing. The other thing to be aware of is when you are buying in your own name, you need to look at what tax bracket you're in, whether you're a basic taxpayer or a higher rate taxpayer, because when it's in your own name, all the income that you get from it automatically is charged within income tax. So that's something to be aware of. The other thing is obviously stamp duty, as I mentioned before. If you already own your own property, buying another property, whether it's buy to let, a second home, a holiday home, whatever, is your additional property. So there are obviously stamp duty there. There's no first time buyer exemption because you already own your other property. So those are kind of the pros and cons when you own your own property. You buy your buy to let in your own name. Now, when you buy your buy to let in a limited company, if this is your first limited company, one, I would get an accountant to do it because you need the right SIC codes, which is whenever you set up a company, it has to have the right code to say what kind of trading it's doing. So, you'd have to have the right code for a property for a company that's buying properties. So be aware of that. The next thing is you do need a lot more paperwork. So because it's a company, you would pay corporation tax. So that is a lower interest rate than if you are paying income tax. So that's one advantage. But then if you're paying yourself out of that company, that will give rise to income tax. You really have to decide how you want to do it. The next thing is, as I kind of mentioned before, when you're looking at mortgages, there are less lenders and the interest rate is slightly higher. But then on a positive side, when you're actually doing your business expenses, if you've got an interest only mortgage, which most buy-to-lets are, that is a business expense, so that can reduce your tax liability. So I hope that's given you enough to think about. Take care.